Hello, my name is Todd Doleshal. I am a certified financial planner and the owner of Elevated Retirement Solutions. On September 18th, today that I'm recording this, the Federal Reserve cut interest rates by 50 basis points, or said differently, 0.5%. So the big question is, what does this mean and how can you take advantage of this? For those of you who might be thinking about this, I wouldn't rush to the bank to refinance your mortgage, business loans, car loans, just quite yet. Reason being is that this was widely anticipated and in fact has been priced into the market for a very long time here. While it was a little bit more aggressive than people initially anticipated for the normal 0.25% that the Fed normally cuts interest rate, really there was mounting pressure on the Fed to cut interest rates rather aggressively after a poor job creation and openings here the last couple of months. So it's nice to see that the Fed did cut interest rates appropriately to help stimulate the economy. That being said, there are a couple things to consider here. Right after this, as I'm looking at the market right now, the bond markets more or less have remained virtually unchanged. And for those of you who may not really understand this or do, you might be thinking, well, why is that happening? And that's because this more or less was already priced in. The market really has been expecting a 50 basis points or 0.5% rate cut up to this point, and that's why the bond market has been shooting up very nicely here, especially the last couple months in anticipation of this. So if in fact the Fed only decreased interest rates by 0.25%, then we would have seen more than likely the opposite with the bond markets going down. So this was basically right in expectation of what the bond markets anticipated, and also relates to what is going on with lower mortgage rates, etc. So again, no need to rush out and look at refinancing. And obviously, if you have any questions on this, that's really what I'm here for. This will impact yields on virtually all investments, whether that's fixed income, money market funds, municipal bonds, treasury bills, and much more. And these are all things I'm considering for my clients and will be taking action on in discretionary accounts. And if this video was forwarded to you by a client of mine or a friend, know that you can reach out to me or schedule an appointment on my calendar here using the scheduling link below. On the stock and equity side of things, historically speaking, there are winners and losers in a lowering interest rate environment. This is the first time we've seen interest rates being lowered in quite a while, actually. That being said, just because interest rates are dropping doesn't necessarily mean that companies are going to be more profitable overnight. They still need to bring in new customers, manage their overhead, and really just do the normal things that they do in a business with financial forecasting. So, but as with most things, the market typically doesn't react, it overreacts. So I'm very, very, very carefully watching sectors and investments that are either shooting up too quickly in anticipation and excitement of this, and conversely that are selling off. And as I'm looking through it, there certainly are potentially some great deals, and I'm carefully monitoring this so that if they are selling off when they shouldn't be, at least in my opinion, we can go to the grocery store and buy things on sale, just like when you've got coupons, and conversely selling things that are, in my opinion at least, overvalued. And again, for those of you who've heard this before, my financial planning clients know as they're approaching retirement and in retirement, we've already modeled out at least 2 years of what they need in distributions in order to fund their retirement, net of inflation, with different markers such as healthcare increasing at more than double inflation, etc. And we've already parked 2 years set aside in cash. And while nothing is guaranteed, it definitely helps reduce risk and helps with the detailed Monte Carlo analysis that I'm working on for all my clients. So if you have any questions, thoughts, or concerns about today's news, about the Fed's aggressive stance by cutting interest rates by 0.5%, and how this will impact you, please don't hesitate to reach out to me. Thank you for your time and wish you all the very best.